Hey traders, Ragi here. We're going to start off our free video today with a look at the Dow, because for those traders who might be unfamiliar with what it is to be a currency trader, remember, it's not just about the Forex. It's about how can I take advantage of any individual currency story and then get the most leverage out of that bias, whether it be a strength or a weakness bias, by buying or selling that currency story against another. Think about the airport analogy. I think any of you that have traveled abroad have kind of inadvertently sort of put on a Forex trade. If you left New York, landed in Paris, and you converted US dollars to euro, that was one exchange rate. You got a certain amount of euros for whatever US dollars you had. And then when you're leaving Paris and you're going to convert back to US dollars, you may have found that you got a better exchange rate when you left, or maybe it was a worse exchange rate when you left. That's kind of a Forex trade. How many dollars am I getting for euro, and how many euros am I getting for dollar? That's a round trip right there. So I kind of go back to the airport analogy. I think a lot more people are really familiar with what it is to exchange one currency for another. And then what are we doing? We're just trading that exchange rate going up or down. No different than if the Dow goes up or down, or no different than if Facebook goes up and down. I know a lot of people were looking at Facebook today. One of the things that I mentioned when I was in the chat today was, gosh, what was the story around Facebook? This was day 2 of that F8 developer conference, and all of a sudden there was some data that showed that the ad revenue wasn't heading in the right direction, and on and on and on. And then all of a sudden, later in the day, we find out that ad revenue was incomplete. So the market headed down to 106.5 and then bounced back up. I was looking for 105 because that would be a really nice weekly retracement. But bottom line was, I feel any pullback in Facebook within the context of a trend nearing the 34 EMA on the weekly is a buy. Well, is that much different than any swing trade or trend following trade that I would put on in any other market? Let's take a look at some trades that I put on recently, kind of bring you up to speed with some of the trades that I'm in. One of them is in the euro. I want a 1255 conservative entry. That would be ideally where I would put on my swing buy. I also have an aggressive, that means a very small kind of stick your toe in the water, put a little skin in the game entry up at 1305. I don't mind taking what amounts to about 35 pips of heat within the context of this correction, because the larger of my two positions is going to be waiting down at the 1255 area. Now, if you don't want to take 1255 and you did not take 1305, this area around 1280, 1270 is a pretty good place to split the difference. And it's also where the 34 EMA on the high is. Not that different than the weekly pullback in Facebook. Sure, I'm talking about a daily time frame here and a weekly, but a correction is a correction. The time frame that we choose to take it on is nearly just a reflection of how long we're going to commit to the trade. That's really it. How much commitment do we have for follow through? One of the things that I mentioned in the afternoon chat as well was I typically have kind of this do not trade zone between 11:30 Eastern and 1:30 p.m. Eastern. And then after that, I can go ahead and start doing a trend follow if we organize back into an upward angle of my wave. So we had an earlier breakout trade that triggered during the morning chat, but a lot of traders were either flat or they didn't take the position and they wanted a piece of it after the 130 cutoff. After the 130 cutoff, which is this line right here, I'm going to just paint this green for go. After this line right here, I know that I'm kind of emerging out of the lunchtime doldrums. I'll reassess what the market trend was. And really, this doesn't always happen, but today the market obliged us very nicely with a pullback to the 34 EMA on the high. I've shown you 3 different time frames across 3 different markets, the Forex markets, the futures markets, and then the equities markets. And it's the same moving average across now 3 different time frames, a weekly, a daily, and now a 5-minute. A trend is a trend. The fact that it's a 5 or a weekly or a daily candle only reflects your commitment to possibly the longevity of the trade. A weekly time frame trade, I'm going to have a much larger time horizon on. A daily time frame trade is going to have a much longer time horizon than a 5. So this actual 5-minute gave us 1, 2, and these are only conservatives that I'm showing you, and arguably 3 entries going into the close. By the way, when I say close, as a Forex trader, I embrace a true 24-hour market. That means that I can manage this long position in the Dow into the Asian session, in which case I've got to keep an eye on Asian economic developments like different, right now, the Japanese market is really very much active because of whether or not we're going to see intervention. If the Japanese intervene with the yen, in other words, sell yen, that's only going to help the risk environment. So we would see, certainly, I think, an acceleration here. But if you want to get a better idea of the risk environment with a long Dow position going into the Asian session, take a look at the Nikkei and ask yourself, are there reasons for me to think that the Nikkei could find a bid and organize into an uptrend? My fear around this area is the Nikkei, without a yen intervention, without a BOJ intervention in the yen, the Nikkei could start to become a little overbought in this area because it's ultimately quite choppy. But when we're talking about something as significant as central bank intervention, realize that this technical level of maybe being overbought in a pretty wide area could mean absolutely nothing. And with an intervention, we could be up at 18,000 in the Nikkei very quickly. We could also be rallying on the dollar yen also, again, very quickly. We could be up at 112, 113, even knocking on the door of 114 in a heartbeat. Okay, so what I've walked you through today is really the touchstone of my trading. Even though a lot of people think, oh, it's Forex, Raghee. No, it's trend trading. Trend trading across, and I'm just showing you here a handful of markets. Find the clarity, the trend is your edge, and then wait for corrections. It's your best risk reward. So a couple things that I'd like to keep on your radar for today, going into the evening session for those of you that are currency traders or are interested in currency trading. We have data coming out of Australia tonight. Let me scroll down here. And that is the Aussie jobs numbers. And the Aussie jobs numbers are going to create a hot zone for us by way of Aussie volatility. And specifically, my watch list is Aussie US, which we have a really nice winner in. I'd like to re-enter, and Pound Aussie. Now, Pound Aussie, I'll tell you might want to put on the back burner because tomorrow at 7 a.m. we have the MPC. So again, pound volatility. Could we take advantage of Pound Aussie, kind of a 1-2 punch from the employment numbers to the central bank event? Absolutely. What else is on my watch list? The pound, where I'd like to sell pound against euro, sell pound against Aussie, Canadian dollar, even Japanese yen. But the Japanese yen, I'm probably going to put on the back burner because the talk about a potential intervention is starting to gather a lot of steam. So it's not like my watch list for the pound is short at all. Pound Aussie, pound loonie, euro pound, and even New Zealand dollar. You can throw the pound New Zealand in there. Will all keep me very busy. So I would say, even though pound yen's been something I've been watching, let's go ahead, because of this very persistent talk about the Japanese government discussing up to a 3 trillion yen interest-free loan to private sector companies. What we're starting to see is money flow, and I want to make sure that I'm not in the way of some yen weakness. Okay, so let's just keep in mind that the yen's going to be a little bit more unpredictable. We don't want to get caught long yen in an intervention. Put the pound yen and even, frankly, the dollar yen on the back burner. Okay, I won't be setting up brand new trades for the yen until we get a better idea of what it is the BOJ wants to defend. But remember, Aussie buys, I think, are still valid. Pound shorts are the gift that keeps on giving. Take a look at those charts, find those corrections as I've shown you. In the premium video, I'm going to show you the particular trades we want to set up and where I'm going to be parking those orders so we could take advantage of those catch the wick opportunities.